Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Imagine you are sitting at an airport waiting for your flight. You are relaxing in a lounge or enjoying a good meal at a fancy restaurant at the airport. Well, Dreamfolks is a company which makes this experience possible. It is a bridge that connects these services with your banks or credit cards. It does not own these services, but it makes these services available to you. So, in this video today, we will look at the business model of Dream Folks and whether this company is worth investing your money. Aviation sector in India is set to grow at a healthy CAGR of 9%. Now with this increase, the demand for premium airport services is also going to soar, which is directly going to benefit companies like Dreamfolks. Secondly, credit card market in India is expanding with a projected growth rate of 13.7% annually. This again will directly benefit companies like Dreamfolks that rely on credit card perks for revenue. Thirdly, trend towards international travel and need for seamless service experience at airports worldwide provide a fertile ground for expansion for companies like Dreamfolks. So the business that the company is in, it does not run any services directly, but as I told you, it is a liaison, a bridge between the customers, these services, and the banks and the credit cards that the customers hold. So, with increasing demand for travel, air travel, and high end service experience that customers want at the airport, the demand for companies like Dreamfolks is going to be really high. Now, in this video, we will analyze Dreamfolk stock on the basis of five important parameters to check whether this is a value investing stock. Correct? We will use parameters like price to earning ratio, price to book ratio, return on equity, debt to equity ratio, and dividend yield. Looking at the price to earning ratio, the ratio stands at 18.6. Now compare it with the industry average of 48.61, which suggests that the share is undervalued when we compare it to the peers in the same industry. If we look at price to book value, it stands at 5.23. Now basically, price to book value is the price you are ready to pay as an investor for every rupee of the net assets of the company. So it is five times that you pay if you want to purchase this share, which suggests a slight overvaluation compared to its book value. But again, it has room for growth. Next, if we check the return on equity, it is at a good 35.10, which is a strong indicator of profitability, showing that Dreamfolks efficiently uses shareholders' equity to generate profits. Debt to equity ratio is at a meager 0.02%, which suggests that the business model of Dreamfolks is asset light. By leveraging technology, Dreamfolks provides an enhanced airport experience without owning any physical assets and reducing its capital expenditure. Correct? So it is an asset light business. Lastly, dividend yield is at 0.60, which again is a moderate dividend yield when compared to its peers. Looking at the technical charts of the stock, the current price is around 230 levels, which was down by 1% for the day. The candlestick pattern suggests bearish as well as bullish movements, no, with a noticeable rejection near 244. Volume has been low compared to previous trading sessions. The RSI is at 29.67, which is in the oversold territory, which indicates a potential buying opportunity. Now there is support around 216 to 220 levels. Resistance is likely near 244 levels. And since RSI is below 30, there might be short-term bounce as buyers step in. Now, recommendations, if you like a technical analysis based recommendations, watch for price action near the support levels of 216 to 20. Monitor volumes and RSI for confirmation of trend, whether it is reversal or in continuation. A breakout above 244 could indicate bullish momentum. Analysts have given a buy recommendation with an upward trend of nearly 84% with a target of 430. Now, analysts believe that the Dreamfolks growth potential, despite near term challenges, is due to the strong market position and diversification strategies that the company is implementing. Now, the company has recorded a 11.5% year-on-year growth when it comes to its revenues, but the net profit has been on a decline due to increased operational cost and changes in client spending patterns. Dreamfolks commands a significant market share in India's airport lounge access with over 60% of all lounge traffic and 99% of card paid lounge traffic. So basically, it is a monopoly when it comes to card based lounge access. The company has successfully onboarded new enterprises clients like Make My Trip, TBO, diversifying its revenue stream. The company is also entering its services into the food and beverage, meet and assist, and other airport services, aiming to increase the non-lounge revenue by 20% in the next 4 to 5 years. Dreamfolks has added 16 new international lounges and 18 F&B outlets, primarily targeting the Middle East market. So, if we look at the pros for the company has a strong market position with significant growth potentials. It has in place a diversification strategy to reduce dependency on banks, and the stock is comparatively undervalued given its future growth potentials. Correct. On the flip side, the risk or the cons for the stock are recent profitability issues due to changes in bank policies. The net profit has, in fact, declined in the previous quarter. Stock volatility and a significant drop in share price over the past year. So these cannot be ignored. So the company do face challenges with recent decline in its net profit, but the strategies that it has put in place could stabilize and grow its business in the long term. Air travel is going to be more and more in demand, especially for a country like India with connectivity, air connectivity on the rise. What do you think about this stock? Have you invested in it, or are you thinking of investing in it? How did you like this analysis? Do you want any other stock to be analyzed? Please let me know in the comment section. I would be happy to hear from you. Please like, share, and subscribe to my channel for more such informative content. And stay safe and happy investing.